Today we're doing an analysis of Eli Lilly stock using Bollinger Bands. Eli Lilly is an American pharmaceutical company that trades under the symbol LLY. Stock prices have been up and down over the past year, and we want to know if this is a good investment to either short still or hold long term. We pull raw data from Yahoo Finance, and it shows a consistent pattern of growth and losses. It seems as the stock goes up, then it goes down, then it goes up, then it goes down. The more it goes up, the more it seems to come down. Um, in the market, this is called equilibrium. So, from a market standpoint, this seems to be a healthy stock because it's full of rises and falls. And as you can see by the Bollinger Bands, uh, it shows both areas of support and resistance as the stock goes up and down, drifting along its pattern. Taking a closer look at the Bollinger Bands, we see that in the past, the best times to both buy and sell this stock would have been late December of 2018 and sell it late January of 2019 or and buy late April of 2019 and sell it early May. This would have been the most profitable time to buy low and sell high. Looking long term through July of 2021, the forecast cone looks pretty normally distributed. It looks like um, it's a normal cone that shows the possibilities of the possible upper limits, the possible lower limits, and possible means. However, if you look closer at a drill down that we did, looking at the forecast by the mean just through April of 2020, we see that this stock is poised to take a slight dip. There's a downward curve forming before it kind of tilts back up. But based on the mean, it's showing that in the near future, this stock is poised to go down. Now, looking at that same period, but based on the closing prices, it looks like the stock is poised to relatively stay in the same place. It looks like it's ending slightly up, but there's some movement in the day-to-day activities, and you can see the well patterns where it dips and then it spikes and holds for a little while, and then it dips, spikes and holds for a little while. There are definitely small whale tracks there when you look based on the actual closing price. And this is a trend analysis chart based on the data from the past year. And as we said in the previous two charts, that the forecast by mean showed a dip or a decline in stock price, whereas the forecast by actual closing price showed um, little up and down behavior and holding steady, whereas this trend analysis chart actually supports the forecast by mean, as it shows that the stock is in fact trending downwards. This is a chart where the line in the middle represents the mean. Um, The green line represents the upper Bollinger Band, and the dark red line represents the lower Bollinger Band, and the columns represent the actual closing price. And we see the interactions between how many times the closing price actually um, really interacts with the Bollinger Primes bands. This is a correlation chart that shows how all of the factors involved are positively correlated. There's a positive correlation in all the factors involved, which makes sense because it's a stock price. So if the stock price is moving and if the Bollinger bands are accurate, then it's gonna flow together. But the factors that we're analyzing are open and close price, the highs of the days, the lows of the days, the volume traded, the lower bands, the upper bands, and the mean. Um, and as you can see, most of the fact, or all of the factors, are positively correlated. Some very, very strong, some moderately strong. But the weak correlation is the thing that I find fascinating because the the weakest positive correlation that we've seen is volume. The volume isn't that strongly correlated as you would imagine. So it really doesn't matter how much volume of stock is traded. It just matters the actual activity of those stocks being traded. I would think that the volume would be more strongly correlated, but it seems it's the weakest correlation out of everything. This is just a look at the correlation between the mean and the closing price. Um, the mean is actually a 20-day rolling average price. So this is the correlation between the actual closing price and the 20-day rolling average. As you can see, that's pretty tightly put together. This is one where it's a correlation chart between the upper band of the Bollinger Band and the closing price. As you can see, it's still tightly along that line. You have, because it's the upper band, there are some upper outliers that's there, which that's to be expected. Just as with the lower band, there are some lower outliers, but the majority of the data points are along that trend line as expected. Here's another chart that, as we said in the beginning, some of the best times to buy would be when the actual closing price is close to the upper and lower limits of the Bollinger Bands. And we see that late October, early November of 2018 would be a good time to buy, and you would sell it uh, either early December or late November and come up with a profit. Late December, it's right on the Bollinger line for the lower limit, so that would be the perfect time to buy, and then you can sell it at mid to early January of 2019. Um, Also, another time when the actual closing price is right directly on the line for the lower level. Um, the late April of 2019, and you would be able to sell it at early to mid May of 2019. Like I said, this pattern happens. It looks like close to once a quarter. So if you can keep an eye out on it, then you can definitely spot some strong Bollinger patterns. This is the data point for the stocks. Again, as you see, it's trending downward. So our recommendation for the Eli Lilly stock is that it's a good stock to short if you can buy it low, buy it at a low point and sell it at a high point that actually coincides with the lower Bollinger Bands and the higher Bollinger Bands. That this happens, as we just said, at least 3 to 4 times a year. It looks like once every quarter, and you can make a pretty decent profit from it because it seems like when it does coincide, then it's a strong correlation. Um, However, if you wanted to hold the stock for years and years, it wouldn't be recommended to buy it at this point in time because the models do show a decrease in stock. The stock is trending downward, so I would say let it trend more than a while. Wait until it's at that low point. Since it's such a dramatic trend, wait until it's at the low point, then buy it when it's low and hold on to it because the stock data does show that it has a rise and a fall. It's a normal acting stock. So if it falls, then eventually it's gonna rise and reach that equilibrium. So I would say wait until the midpoint of 2020, buy it then, and then hold it for about a year or two, and you should be sitting pretty good.